In today's video, we will discuss about one more popular fund in Midcap segment, that is PGIM India Midcap Opportunities Fund, and check its performance using real data. And by the end of the video, we shall be able to decide whether to continue our investment in this fund or should exit this fund now. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that PGIM India Midcap Opportunities Fund has been one of the star performance in its category, that is mid-cap category. Here we will be taking in consideration data of direct plans only. Firstly, let's look at the basic details like AUM, that is total asset under management, which is around 6,000 crores, which is okay for a mid-cap category, while the expense ratio is 0.42% and is on a lower side as compared to other schemes in the category. The benchmark index, that is the reference against which the scheme is compared, is Nifty Midcap 150 TRI. Now let's look at the sector-wise allocation. From the table, it is very clear that the fund is invested in capital goods and finance, followed by automobiles, material, services and chemicals. Finance being a core sector and services and chemicals being an evergreen sectors, and quite a good performing mid-sized companies form a part of this sector. And when compared to its benchmark, its allocation in all other sectors except in finance and automobile is quite different. As evident, ABB, Timken and Cummins India are the main stocks of the capital goods sector, whereas HDFC Bank is from the financial sector. TVS Motors is from the automobile sector, whereas Dalmia Bharat and Kajaria Ceramics are from the material sector. In total, there are around 49 stocks in the portfolio and no stock has more than 5% allocation in the portfolio. This large stock selection across category provides a good overall diversification to the portfolio. On checking the portfolio allocation, it is evident that the mid-cap shares form around 68% of the portfolio, whereas large cap shares form other 21% of the portfolio, and rest 11% is allocated to small cap stocks. Its allocation is similar to that of its category, and this type of portfolio allocation and strategy is quite beneficial for long-term investors. Mr. Anirudh Naha has been managing the fund since April 2018, that is since last 4 years, and has been joined by Mr. Vivek Sharma in June 2021 and by Mr. Puneet Pal in July 2022. Since last few years, especially after joining of Mr. Anirudh Naha, there seems some stability has come in the fund, which we will see in the performance section also. Now let's see how the fund performs on risk parameters. Here we compare the parameters with the benchmark index and category average. First, mean return, that is the average return in a year, which is 39.78. Just ignore the barking of the dog. Our neighbor has recently bought a new dog which makes sound the whole day. So now, coming back to the video. First, the mean return, that is the average return in a year, which is 39.78, which is quite high than both the category average and benchmark. Here, higher the value is better. Second one, standard deviation, that is a tool to measure how much the return has deviated away from the mean return, which in this case is 24.35 and is less than the benchmark index but more than the category average. Here, lower the value is better. The third one, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.49, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth, beta, that is the volatility of the scheme compared to the benchmark, which is 0.93, which is more than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 12.16, which is quite high than the category average. Here, higher the value is better. Here, on almost all risk parameters except the volatility, PGIM India Midcap Opportunities Fund perform better than the benchmark index and category average, which is a positive sign for a fund. So now let's compare the trailing, calendar and the rolling returns. On comparing the trailing returns for 7 years and less, it easily beats the benchmark and the category with a good margin across the entire period, which is quite commendable and a positive for a fund. Now let's also check the calendar returns for consistency in the performance. On checking the calendar returns for last 8 years, the fund has underperformed till 2018, and only after that, that is from 2019 to 2021, the fund has been able to beat its benchmark and category, that also with a good margin. This can be correlated with Mr. Anirudh Naha taking over as the fund manager, and his vision and strategy has put this fund in a good position. Hence, as stated in my earlier videos also, the role and vision of the fund manager is very important in the performance of the fund, which is evident in this case. Now let's also check the rolling returns for 5 years, 3 years, 1 year and 6 months. Here also the performance of rolling returns is better than the benchmark and has been able to beat the benchmark more than 50% of the time. Especially if you observe after the first quarter of 2020, that is after the downfall due to COVID pandemic, the fund's performance has been improving better and better, and hope this trend continues in coming years also. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here the value is 122, which indicates that the fund outperformed 22% more than the index during this rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here the value is 76, which indicates that the fund declined 76% as compared to the index during the fall period. Here, lower the value is better. The upside ratio and downside ratio both are quite good, and it has been generally observed over long run that fund having a higher downside protection ratio is able to generate better returns. Here, as both the ratios are quite good, the fund has the potential to generate excellent performance in long run. Now let's see the risk return graph. Here on x-axis we have standard deviation, whereas on y-axis we have total returns. It is very evident from the graph that the fund has better total return value with a higher standard deviation as compared to the category average and the index, which indicates that the fund has been able to generate good returns with higher volatility than both its category and index. Generally, higher volatility is directly linked to higher risk, but if the investment horizon is longer, this does not always stand true. Hence, for a mid-cap fund, one should have a longer investment time horizon, typically more than 7 years. So now coming to the conclusion that what should investors do? Before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request you to press the like button and also subscribe to my channel to watch such interesting videos in future also. In my upcoming videos, I am planning to take the topic of technical indicators like RSI, that is Relative Strength Index, MA, that is Moving Averages, etc., and how these indicators to be used in selection of mutual funds. So stay tuned and subscribe to my channel for getting notifications about this interesting videos. So coming back to the topic, now let's see what investors should do. First, the existing investors. As the fund performance is good and is able to generate good returns, I feel there is no need for the existing investors to worry and continue their investment in this fund. The volatility of the fund should not be a concern as mid-cap segment is prone to higher volatility. Second, the new investors. As the fund performance has been quite good in last 3 years, one can start investment in this fund. The higher volatility of the fund should not be a concern if you are planning for long term of investment, say 7 years and more. I would like to add that presently I do not have this fund in my portfolio, but planning to start a SIP in this fund shortly. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now and also press the like button. Do check my older videos. Click the attached cards to watch these videos. Thank you.